Now this is the solution for our partnership account under dissolution. Now if you look at our left side, we have the problem, and the problem is good, better and best partners sharing future profits and loss in the ratio of 5:3:2. The following is the balance sheet as at 31st December 2012. Liabilities, we have creditors, Miss Good Loan, joint life policy reserve, investment. In the credit side, we have bank, investment, joint life policy, debtors, less provision, which is 1,800, stock, machinery, best capital. So this is the nature of the question that we expect. Then in additional information, the partners agreed to dissolve the partnership under the following terms and conditions. The life policy is surrendered at 6,000. Investment are taken over by goods for shillings 52,500, and he has agreed to discharge Miss Good Loan. Better took over stock for shillings 21,000 and debtors amounting to shillings 15,000 for shillings 12,000. 4. Machinery is sold for shillings 165,000. 5. Balance of debtors was realized at 50/40. Realization expenses were incurred for shillings 1,800. 7. Investment remained unrecorded for shillings 9,000. Were taken over by creditor. Required to prepare the necessary account in the books of dissolution of partnership. Now, this is the nature of the question. So when you go to the solution, we said number 1, open all the accounts. So we have realization account, let there be good focus. Let me bring it. Let's see. Okay. So we have, just a minute. Yes, we have realization account, we have partners account, and we have cash account. So these are the 3 accounts that must be prepared. Now, number 1, when you open realization account, if you look at here, balance brought down, we have cash, we have inventory. So we are bringing down all the assets, whereby we have investment policy, debtors, stock, and machinery in the debit side. In the credit side, transfer all liabilities. So we have creditors, good loan, and provision. These are the totals. Now we go back to the narration, the terms and conditions which are used in the preparation. Number 1 term is the life policy is surrendered at 36,000. So meaning 2 accounts will be affected here. We have good is taking over investment. No, there is what? Cash, life policy 36,000. Now when you go to cash account, we have life realization account, life policy 36,000. The next one is investment are taken over by goods for shillings 52,500 and agreed to discharge Mrs. Good Loan. So when you come to realization account, we have good investment 52,500, and when you come to partners account, in partners account, we have realization account in bracket assets. Good is taking over, so we debit partners account, we credit realization account, which we have done that. Number 3, Miss Good Loan. When you come to Miss Good Loan, we have good loan 30,000. You debit realization account, you credit partners account, which is realization here, which is 30,000. That one has been effected. 3rd, better took over stock for shillings 21,000. Debtors amount to shillings 15,000 for 12,000. So debtor is taking over stock and debtors. So you come to goods account, you credit better, we have stock and debtors 21, 12. Come to cash account, we debit. No, come to better account, we debit. Better, we have 33,000. The fourth, machinery is sold for 165,000. You're selling machine, so partnership is selling machine. So two accounts will be affected. Realization account, you credit cash, machinery 165,000. Then cash account, you come to debit side of cash account, we have machinery 165,000. Now the next one is the balance of debtors was realized at 5,040. Go to realization again. Debtors, cash from debtors, which is 5,040. Go to cash account, realization debtors 14,040. $14,040. So it's okay. It's supposed to be 5,040. Next, we come now to the next question is realization expenses incurred for 1,800. So we go to realization account. We said you debit the realization. So cash from realization, cash payment for realization is here 1,800. When you come to cash and bank account, we have realization payment 1,800. Investment remain unrecorded shillings 9,000 were taken over by creditor. That transaction we have investment creditor 9,000, cash creditor 46,000, total 55,500. Come to cash and bank account, realization 46,500 plus the 9,000 which was received, it's here, which actually I've added with the data, which is now giving us 14,500. Now number 1, in procedure number 8, we said close the realization account. So when you close the realization account, total the debit side, total the credit side. So debit side, credit side is more than the debit side. So we have a credit balance. So credit balance means we have profit to be shared. 293 minus the total for this side, you get 293,340. So our balance here, you share the balance between the three partners in their profit sharing ratio. You get 17,295. Better is getting 10,347, and best is getting 6,898. We close the realization account. Come to partners account. In partners account, we have partners account. In the credit side, we have transfer the profits. So realization, the profits are here, 17, 10, and 68. And then we transfer all the reserves. Reserves are worth 60,000. So you divide them according to their profit sharing ratio. You get 30, 18, and 12,000. And then you close the partners account. In our closing of partners account, what you do, start with good. You total good, debit side, good, credit side. Credit is more than the debit, so we have cash 144,795. Now this cash is what good is supposed to be paid. Is a partner who is supposed to be paid. Come to better again. Better, we have 88,347, 88,347. Cash, better is paid 55,347. Now finally best. Best, the debit side is more, so we have 34,500, cash 15,602. Now best is supposed to pay. So cash account, you come to cash account, best is paying 15,602. Good is being paid 144,795. Better is being paid 55. Now when you prepare this account, it must balance. So you see our total is equal. So meaning that our dissolution has been successful. Thank you so much. See you then.